As we wrap up 2023, the housing market settles down for a few holiday weeks and we'll begin the new year with fresh listings and the New Year's price signals. The most compelling leading indicators for the housing market tend to come right after the new year. But there is something notable in the data right now, November and December, and we are starting to measure increases in sellers compared to last year at this time. Slightly more sellers each week. The defining characteristic of 2023 housing market was how few home sellers we had. Even though demand was very low due to affordability challenges with higher mortgage rates, we had so few people selling homes that the supply side of the supply-demand equation was low too. As a result, there were dramatically fewer home sales in 2023. 2 million fewer home sales in 2023 than the prior year. What we're seeing in the data now are the first changes in that market contraction trend. We can see the first signals that we'll have more sellers in 2024 and therefore we'll have more home sales. I need to point out that when I talk about home sales increasing in 2024, do not mistake me for saying that home prices will increase in 2024. There isn't any signal in the data for prices to surge next year, even though the volume is on the upswing. I find that people often conflate the two. Home sales are down, therefore prices are down, or home sales are up, therefore prices are up. They're not necessarily connected that way. And I will share the details for both of those sales volume and prices in the video today. At Altos Research, we track every home for sale in the country every week. We track all the pricing, all the supply and demand, all the changes in that data, and we make it available to you before you see it in the traditional channels. I'm Mike Simonson. I'm the founder of Altos. Let's take a look at the U.S. housing market for middle of December 2023. I can't believe we're almost to the new year. Available inventory of unsold homes on the market, single-family homes on the market, dropped 1.4% to 539,000 this week. There are now 3.2% more homes on the market now than the same week last year. There are still 34% fewer homes on the market now than the same week in 2019, 34% fewer. So there's no flood of sellers, of course, but inventory is inching up over a year ago as homeowners settle into the new reality of 7% mortgage rates. In this chart, each line is a year. Inventory usually peaks in August and then declines for fall and winter. In this post-pandemic era, inventory now seems to peak much later in the year. This year was the middle of November before inventory peaked. This year's curve is the dark red line here. If you look closely, you can see how this year and last year, the curves had a sudden spurt of inventory growth in September, starting in September. Both this year and last year, in September, mortgage rates spiked. That cooled demand, the market saw late year inventory increases. Mortgages have been falling quickly in the last few weeks, and if that continues into the new year, expect that inventory will get gobbled up by buyers happy about renewed or newfound affordability. If rates continue to fall, inventory will decline also. The gray lines at the top of the chart here are where inventory used to be, available inventory, unsold homes, like on the market in the olden times. The question I get is, are there conditions that will get us back to the old levels of inventory? My suspicion is that it'll take multiple years at rates in the 7s or higher to gradually build inventory back. The question is then, could a deep recession create a lot more inventory too? So yes, I suspect it could. But the interesting thing for this recession, should it ever arrive, when and if it finally arrives, is that I suspect it'll result in less inventory build because homeowners have such a great deal on their homes now that they will fight like mad to keep them. When in previous recessions, an onerous mortgage is the thing you want to get rid of first. So it looks like when this recession, if and when it finally arrives, that we'll have less inventory build than in previous recessions. That's my guess. Here's what is starting to change in the data. And so this week we had 11% more new listings than the same week a year ago. 48,000 sellers hit the market this week. Of those, 8,000 are already in contract and no longer in the active inventory count. For 18 months now, we've had dramatically restricted supply of home sellers. The shift started the first week of July 2022. Each week we've had 15, 20, 30% fewer new listings than a year prior, and now we have more new listings. So this trend looks poised to continue after the new year. One implication is that more sellers means more sales can happen in 2024. We are finally shifting from contractionary to expansionary market. We're also watching for any sign of a flood of sellers. Like, is there any signal that we might get supply out of balance with demand? As of now, there are no signs of a flood. Even though new listings are inching up, there's still 5,000 or 10,000 fewer new sellers each week than in previous years before the pandemic. So there's no sign of any surge of investors panicking or distressed unemployed people unloading. Like, there's none of that is in the data. But this is the chart we watch every week to know if that possibility shows up. So keep your eyes here. We want to see the bars climb taller each week, but not shoot dramatically higher. We also watch this chart for the immediate sales. That's the light portion of the bar here. If there are more sellers and the immediate sales falls, that would be a very fast signal that supply is up and demand is down. If that were to happen, that would be a notable change, and we'd want to pay very close attention. It is not happening at the moment. The new listings are up over last year, and the immediate sales are up also. So so far, the new inventory is being met with demand. The other place we can watch whether buyers are going to take up any increased inventory is in the contracts data each week. So at Altos, we track every home for sale in the country every week. We track all the contracts pending too. So here's what we now know. Home sales each week, all year, we're tracking 30% fewer than the year prior. There were fewer sellers and fewer buyers, and the market has been in deep recession that way. But the recession has been coming to a close, and as I've mentioned, we've crossed into expansionary sales each week. This week there were 46,000 new contracts pending for single-family home purchases around the country. That is 7.7% more sales than last year at this time. In this chart, we have the change in new contracts from the year prior. The horizontal line there at 0%. Below the line, that market is contracting with fewer sales than the year prior. Above the line, the market is expanding with more sales than the year prior. See how we started the year way below the line, 30, 40% fewer sales each week. Gradually, we gained ground. But even as recently as October, the market was still contracting. So if you're a realtor or a loan officer, your business is dependent on transaction volume, and you felt this obviously intensely. But now, at the far right end of the chart, each week is above the line, which tells us that more new contracts have started and the market is back to finally growing again. Now, these growth are of very low numbers. This is not a boom market, but it is the first signs of growth nonetheless. Okay, so that's the current state of supply and demand for residential real estate around the country. But what about prices? As I mentioned earlier, when I talk about sales increase, do not confuse that with prices increase. There's nothing in the data that says home prices are jumping in 2024. So let's shift our attention to what the data is saying about 2024 home prices. We know that in 2023, despite demand for real estate declining, supply also fell, so we ended up with a balanced market and home prices are flat to up just a hair over last year. Demand was low, but prices held up because supply was so low too. Will that happen again in 2024? One place we can look is the price reductions data. This is the leading indicator for where home sales will close in the future. And we can see that last year there were thousands more homes sitting on the market with price cuts and no offers than we have right now. future sales prices are in a stronger position than they were last year at this time. The leading indicators for prices are not strong, though. Better than last year, but still not strong. Currently, 37.6% of the homes on the market have taken a price cut from their original price. That is more than normal and shows that we don't have strong demand. We don't have a flood of supply on the market, but this level of price cut shows us that if we did somehow get a flood of sellers, prices would correct down very quickly. So keep your eyes on price cuts as we enter the new year. So again, affordability is obviously too tough for home prices to rally higher in 2024. The median price of single-family homes in the U.S. is now $420,000. That's down a little over 1% from last week. That's a normal change for December. As I've been saying for a few months now, home prices are finishing the year 2 to 3% above 2022. Basically flat for the year, up a little bit. In this chart, there's a view of many years of home price changes, and you can see that the June 2023 peak never got as high as the June 2022 peak, the all-time high. I'd be surprised if we suppress it this coming year either, actually. So because rates are still in the 6s or 7s, I expect a slow climb after January, slow price climb after January. As of right now, 2024 looks like another year of roughly flat home price changes, give or take a few percent. If mortgage rates fall substantially early in the year, then that would be one scenario where demand would pick up more than supply, inventory would fall, and that would push home prices higher. That'd be one scenario. This needs to happen early in the year because that's when the bulk of the year's activity happens in the first half. As we see more sellers ease into the market now, we can use the price of the new listings each week to gauge whether buyers are happy about that. That's the bright red line on this chart. By the end of January, we'll see if buyers are finding the current mortgage rate environment favorable enough. The bright red line will dip for Christmas and New Year's in the next couple of weeks, and then start climbing again with fresh inventory in January. And at that time, we watch how steep the climb is. 2 years ago, to start 2022, it was the end of the pandemic boom. Everyone knew it. Rates were low but going higher, so buyers were grabbing everything as fast as they could. Bidding wars were driving the price of the new listings higher every week. So see how quickly the bright red line jumped in January 2022. This year, that climb was much slower. And that showed us some demand, but obviously less than the crazy time before. So 2024 is going to look like 2023. The leading indicator in January sheds light then on the price curve for the whole year. So to wrap up for this week, we have a few more sellers in 2024. Not a lot, a few more. Home sales are on the climb too. Available inventory is still restricted, but is a little better than last year. So inventory up, sales up. But prices look like they'll be flat again over the next year and probably not surpass the all-time high set 18 months ago. If you need help to help buyers and sellers see this change first, you should join us at Altos. People need you to help them understand this changing market. They need to hear it from you. So go to altosresearch.com and book a free consult with our team. We'll help you learn how to talk about the market and the data with your clients and prospects today. There's a link in the description below to join us. Click that and let's get started. Thank you. We'll be off next week and then back after the new year.